When I first got into trading, I would always ask myself, how on earth are people catching these mega trades? Well, today I'm going to show you one of my favorite trades from 2024. Let's begin. So we're going to be breaking down a setup that was heavily dependent on context, and I'll explain why in a few moments, but just to overview of it, this was a 500 point trade on NASDAQ with one entry, one exit. That's a big move. If you're not familiar with the NASDAQ, that's pretty much an entire average daily range on a bigger day. So let's break down some of the nuances with this setup. A trade like this comes down to one main thing: preparation meeting opportunity. What I mean by this is you could be prepared for an opportunity that's just not there. You could be chasing ghosts. You could be thinking that something like this might happen every day, or it might happen tomorrow because you're ready for it. But the reality is opportunity comes around when it comes around. You don't dictate when opportunity is made available. You can only observe the information you're provided and see, well, does that fit your risk model? And is that something that you could potentially execute on? You can be prepared for nothing, or you can simply miss opportunity. There's a few different ways that could come down. When we're looking at a setup like this, it's going to be highly dependent on the higher time frame context. So in this specific scenario, we relied heavily on just the daily time frame. Really, it's the weekly candle, but we're going to get down to exactly why that mattered. If we're looking at this, we had, this is December 2024. We had a pretty knee-jerk reaction to the FOMC, what they had said there, and it sent prices lower. Basically, uncertainty about upcoming inflation data, the whole nine, doom and gloom. So the market had traveled substantially lower on that news, and the day after was also a weak day. It was a bearish day, rather. And we come into Friday. And the question is, are we going to sell off through the rest of the week, finish the week lower, or is this Friday going to potentially provide a bounce scenario? Now, when I'm coming to this market, when I'm looking at this, what I see is this. I see this area right here, right? I see all of this price action. No matter how you look at it, you can potentially say that, this might be your inversion fair value gap. Maybe this is your support level. Maybe it needs to sweep this low. There's a few different ways you can see it. Personally, I was assuming somewhere in this area would be reasonable. However, I'm not just going to buy blindly based on an assumption. I need to validate that with multiple confluences. So coming into the Friday, we did have inflation data that was about to be released that largely reversed what they had kind of worried about at FOMC. So this flip-flop provides asymmetrical opportunity if you know how to position yourself in these types of moves. Historical relevance. What does that even mean? We're day traders. What do you talk about historical relevance? Well, anytime you see something extreme that you haven't seen before, you can pull up your phone and say, hey, ChatGPT, how often has the market closed 6% lower on the week for NASDAQ in the last 50 years? And they'll be like, well, like 5-6 times. You're like, is this going to be one of those? And if it's not, you're more likely to have a better outcome betting against something that's very unlikely, very low probability. I always say, if the sun has to explode for your trade to work out, you're on the wrong side of the trade. You do not need a miracle. You need almost a guarantee when you're looking for a setup like this. So ahead of the New York Open, there was that data. I saw an expansion higher, and this had caught my attention, and I'll explain exactly why right now. When we're looking at the 15-minute chart that we have right here, I have a few reference points drawn out. These are personal to me. Many other people use them, but if you're not familiar, I'll point out some of them right now. This right here, this line, that's going to be your New York Midnight Open. This price right here represents to me a common inflection point in the markets. So typically on a bearish day, you might see this trade above during London, and then it sells off during New York, or the opposite during, maybe it's weaker during London, and then above for New York expansion. We had kind of just sold off all the way down to here, right? And we started to see a potential structure shift. That's your market structure shift. This is your data candle. All of these things coming together made me think we already made a move lower. And typically, if London trends in one direction, New York can have the tendency to reverse. So we had one confluence here. We also had the Wednesday low right here. So my thoughts were, I said, hey, if we could potentially figure out a way to position here, get above this level prior to the Wednesday low, we could potentially run for a midweek high. So it was a if then scenario where it's like 1, 2, 3, 4. That's what I was looking at. It was a very step by step. So if this did not work, the trade was unlikely to work. These structural developments were key to me being able to form a bias to support higher prices. Now, for me, that's not enough. I'm not going to just execute on the 15-minute. I'm going to refine this across multiple time frames. That setup right there was a reclaim of the prior day low. As you can see in this example, that's your prior day low, and this is your prior day high. This right here is what I viewed as a potential rubber band, right? So we're into an area where I had drawn out previously the night before. I was assuming that there would be some sort of reaction here. We had a positive news catalyst and we had structural levels. So it doesn't matter what system you trade. When you see something like this and you understand that this is a range right here, that box, a failed break leads to a very high probability run to the other side of the range. It doesn't matter how big the range is. This is a mechanical occurrence. It's not an opinion. When you see this happen over and over and over and over, especially this is a very common thing that I would see when I was trading options. If something gapped below the prior day low, overnight, and it was in a strong condition or it was into an area of support, it would often run to the other side of that range. There was like a stat where if it reclaimed prior day low, there's like an 80% probability that it would reclaim prior day high or at least test it. So this scenario of a failed breakdown into an area of support on the fact that it was an overextension move, I mean, it was free money. This was a very free money trade. That's exactly what you want to be looking for in almost every setup, regardless of the magnitude. You want all of the variables to align for you. Something that's going to give you a high degree of certainty. Now, if you want to go back, we'll look at some of the price action relating to this setup at the very beginning. Right here. So this is a 5-minute chart for NASDAQ. As you can see, my entry was largely based on a sweep right here. These are the execution arrow prices from TradeZella. I use TradeZella to track all of my trades. This is something that if you're not using, use something like this. You definitely want to be able to go back through historical data and look at your best and your worst trades. So in today's example, we're going over one of my favorites. This isn't necessarily my best or my most repeatable. This is just one of my actual favorite trades because you can't really say, oh, I caught 500 points on NQ all that often. So what do we see about price here? We can tell that this was a large expansive move. And here's a little pro tip. If you're not catching these types of moves, you can always go back and look at examples like this. And then you want to reverse engineer it. So you want to see what would have been the best entry? What would have been the optimal exit area? Was there any sort of structural areas where it might have rejected? Was there any areas that you could have got involved in the trade had you not got in at the open or near the open rather? With this setup, I look at characteristics. So when I'm reviewing this trade, see how there's very minimal drawdown, retracements, consolidation. It's a 5-minute chart and it looks like it goes up. There's no hesitation. So this means that there was a lot of edge in the setup. Regardless if you understand why a setup worked or why a setup delivered the way it did, if it moves like this, there is substantial edge in finding out how to get positioned on one side to trade to the other. Let me repeat myself. If a market moves like this, there's substantial edge in getting positioned on this side. So any day that you see that's extreme, any day that you see that's like, how did that even happen? You have to dig into the charts because the answers are almost always there. And if they're not on the charts, there was something on the news, right? Something that came through, it hit the tape, and it gave the market a narrative. It gave the market a set of instructions to run for. Oh, this is really positive outcome, right? Is that just going to happen based on pure price action? No, this was largely driven by a macro narrative. Inflation, it was bad, so we sell off. But then actually, no, it's actually not that bad on the data, and it rips higher. There is way too many outside forces that act on markets when there is times like this. When you're at an extreme discount, we're talking down 6% on the week. What is the NASDAQ? It's a collection of companies. What is Wall Street? There's a bunch of different firms that are buying and selling these companies. Now, when something's on such a steep discount, is it just going to stay there, or is the market going to reprice it higher? That's what we're dealing with. This right here is when you had all of the tailwind at your back. You had everything working for you. You had no resistance. And it can be seen as the fact that there are very little wicks. I don't see a large wick like this on there anywhere. I barely see anything. I just see there's what, 2 down candles in the whole uptrend on the 5-minute. Argue maybe this one, maybe this one. So you have maybe 4, you have maybe 20 minutes of going lower, right? In a giant move like this, 6:30 Pacific to 10 a.m. It just moves higher. So with a setup like this, they don't come around that often, but if you can understand the context on what makes a market bounce and what makes a market move, and realize that it's not just candlesticks all the time. Candlesticks can get you far, but understanding that things happen a certain way, that's even more important, because this is not, when I say not, of course anything can happen, but this is more than likely not going to close as a weekday. It's more than likely going to bounce. And if you can align with other variables based on market structure and reference points from there, then you can have a pretty high degree of certainty that you'll get a bigger move like this. So let's continue, get back to where we were. This is my trade execution. You see, there's a concept from ICT Concepts called TGIF. There was a loose assumption that something like that would happen, but again, this isn't necessarily something that happens all the time, so it's hard to define it by one setup. I really like to think of this as more of a capitulation, right? All the panic is gone, and now we have to bounce. And if you want to see an example, you can look at really the end of February. What did we do on the last trading day of February 2025? It's a very, very, very similar setup. So when you understand the context, you can apply this in future scenarios. And that's why I'm showing you this today, because this type of logic would have worked very well for you on Friday. If there's anyone out there trying to short on Friday at the end of February, they're not loving it. So with this type of action, again, what was my realized R multiple? Planned R multiple, because I had a number in mind, right? I had a number in mind, 700. My realized R multiple is 10R. Very rarely will you find 10R what you are willing to invest in a market like this. Futures market is highly efficient. There's very few opportunities that are super asymmetrical. Otherwise, if the market was truly asymmetrical like this, there wouldn't be a need for stocks. Stocks are where you find moves like this. This thing right here, this is like a normal day on Palantir. But for futures, this is extremely rare. So when you find these opportunities, you look at it, you look at it for what it is, and you also have to ask yourself, once you've executed, what could I have done better? In this scenario, I honestly could have probably positioned a little more aggressively. We're talking $197 of risk. I could have maybe 2.5 this, right? That would have been maybe more appropriate, maybe $600. And what would that have yielded? Would that have yielded necessarily double or triple or whatever? Maybe not. It would have gave me more flexibility and maybe partial out. So maybe this would have been more like a 3,500 or something, right? There's more than one way to look at it. So with a market like this, when there's opportunity like this, it doesn't happen every day. There's 2 main variables you got. You have location, and then you have lower time frame confirmation based on that. We discussed both things. We talked about the area on the daily chart that I personally anticipated some sort of bounce. Whether or not that was your area is up to you. You look at whatever the data says to you. Do it over 100 trades, 200 trades. You'll see what areas are reactive in price. To me, I anticipated a bounce there, but I don't buy it because I don't trade the daily chart. I trade the lower time frame confirmations on it. So the 15 really kind of tipped its hand to me. I was able to see that I think we're skewed to go higher, and that's what I leaned into. So that's where you get a setup like this. The cool thing is I ended up doing this entire thing on live, and this was one of the first lives in stream that I did with the group. Back then, I didn't even know really how to do any of the streaming, so it was just, we caught it, and everyone's just like, did that really just happen? But it would have been nice to have the video. But now, honestly, it's cool because I do capture all these videos. I post them on YouTube as well afterwards, so you guys can go back and watch some of the sessions. The reality is, when I'm streaming, I'm showing everything I do. when I post the stream, you get to see the good and the bad and the funny or the informative or whatever. So that's a huge thing that I'm working on this year, is just getting the content out. So if you want to see live trades like this, feel free to check us out. The site will be up soon. But if you enjoy this type of content, be sure to like, share, subscribe, do all that if you could. Thank you. All right. Enjoy your day.